about what Benioff said?
Well, I agree with his comments. I think it really is about, it still is about making money, but it's about making money over the long term, not the short term. I agree with Milton Friedman's original statement. He never mentioned time frame, and Wall Street is thinking that's just 91 days. To me, it's about 30 years, and that's what Salesforce is about making money over a long time period, which means you have to consider these other factors about E, S, and G.
I mean, are you telling me that, going forward, you're going to be looking at social impact scores, for example, as much as you're looking at analyst ratings and other things when deciding whether to invest in a company?
Scott, I'm telling you, we do that right now. When we look at a company, we look at their financial statements, but then we also look at how they operate. How do they treat their employees? What's material to the company? Because not all these issues are material to certain companies. To somebody like Salesforce, you care about how they've done on the Me Too issue. You care about how they're doing with employee turnover. You care about cybersecurity with a firm like that. With an oil company, then we care about their carbon emissions. What do they do with their waste? So it's different factors, but you have to, if you talk to a credit manager or even talk to Charlie as a value manager, these are long-term business risks that they factor in. We just label them E, S, and G today.
I like you involving our panelists. Well, Charlie?
So we need to understand the difference between means and ends. Let's go back to Aristotle. The means to make profits are things like good relationships with your customers, being a good corporate neighbor, being a good environmental neighbor. But in the end, you have to make profits for your shareholders, or none of those groups will do well. Ask a GM employee how they did with the social responsibility that they had when they were losing money. Ask HP today whether it mattered, whether they were a good corporate citizen. So yes, these are very important means to not pollute the environment, to have good relationships with your customers and employees, but you better make money in the end, or they're going to be finding somebody else to run those assets.
Chris, can you give us any examples of some of the investments that you're looking at that would sort of satisfy both of these long-term profits for your investors, but that are also following the ethos that you're buying into at this point for the ESG?
I absolutely can, because most of our investments, particularly long-term, I don't want a company to cut corners today just to make profit. I need them to make that profit over the next 10, 15, and even 20 years. So if you look at our private equity portfolio, and I know a lot of people would say, hey, private equity cuts corners. They don't. They make companies more efficient, which I agree with Charlie. It's the means to make profit over the long term. So you look at our infrastructure investments, very long-term patient capital, adding value to society, which, makes us money. Because at the end of the day, I'm about making money. Real estate transactions. If you own a property in an office building, it better be LEED standard. It better be environmentally sensitive for the employees and for the tenants, because they want better energy prices and they want to operate more efficiently.
But what if the company was making less money, to go back to Charlie's point, but was more socially responsible? Would that be acceptable to you as an investment opportunity? You would be willing to sacrifice the company's money-making ability because it was doing better socially?
Scott, let me turn that around and say, yes, I'm willing to see them cut their earnings now if it generates profit into the future. It's still about turning a profit, but far too companies are focused in just on the next 91 days and doing things that sacrifice profits 3, 4, 5 years from now. I need those future profits. I don't need today's profits as much as I need future profits. So you're getting into nuances where people get hung up on. I'm not about companies being for just social causes. Companies exist to make money over the long term, and they've got to do that by providing some good to society. Otherwise, people aren't going to buy their products or invest and give them capital.
Chris, Governor Gavin Newsom did sign this executive order sort of asking you to favor these green initiatives or these green investments. How far do you have to shift your portfolio to make sure that you're complying with this executive order, or are you already there?
We've been doing things in environmental areas for over a decade, actually probably 16 years now. And I just met this morning with a representative of the governor's Department of Finance to talk about how they're going to build this up between the 3 pension plans and develop it. So it's still at the early stages, but all 3 of our pension plans in the state have been doing clean energy investments, environmental investments for over a decade, and it's a matter of building upon that. So we applaud the effort. We're going to work with the governor. Our board is already looking, and started yesterday, at looking at a low-carbon future. People don't realize how much climate change is going to impact everyone's portfolio, and we're trying to factor that in now, and we'll work with the governor to find solutions into the future.